lender with rate here on Wednesday, August 27, 2025, and your weekly mortgage update. So first up, let's talk about Jackson Hole. So this was Jerome Powell's last appearance as the Fed chair at this big annual meeting, and his message was pretty cautious. He said that while future rate cuts are possible, they're not guaranteed. The Fed will be watching the economy very closely through the first half of 2026 before making big moves. Now, here's the challenge that the Fed is facing, right? So inflation has ticked back up to 2.6%, which is above their 2% goal. And Powell specifically pointed out that the tariffs are adding pressure to these prices. At the same time, the job market is slowing down. Job growth has cooled off and unemployment has climbed to 4.3%. So the Fed is stuck between fighting inflation and supporting jobs, two goals that don't always move in the same direction. Powell also did briefly mention AI and technology, saying that it could boost productivity, but the overall impact on the economy is just still unknown. Now, how do the markets react to this? Well, stocks jumped higher, bond yields dropped, and traders now think that there's a stronger chance we'll see a rate cut in September. Mortgage rates did follow along and actually dropped to some of their lowest levels recently, about 6.5% to start off this week. Now, what's coming up this week? All eyes are on our inflation data, especially Friday's core PCE report. That's the Fed's favorite inflation measure. We'll also get reports on consumer confidence, durable goods, and personal income and spending. If inflation looks softer, that could push the Fed closer to cutting rates. If it's stronger, the Fed may hold off. And finally, let's look at mortgage applications. So last week's data showed that purchase applications were up 2% week over week and up 25% compared to last year. Refinances dipped 4% week over week, but they're still up 19% from last year. Right now, refinances are making up about 45% of all of the transactions. And keep in mind, guys, that these numbers were based on rates around 6.625% last week. But since then, rates have come down a little bit. So we could see even stronger activity in next week's report. So to sum it all up, the Fed is cautious, inflation is still a concern, the job market is softening, and mortgage rates are still at recent lows. We'll be watching inflation data closely to see what's next for the interest rates. So thanks for tuning in. And as always, if you're thinking about buying, refinancing, or just curious where rates might be headed, reach out. I'd love to chat. Don't forget to like and subscribe so you don't miss next week's